let's jump into part one this week in Bitcoin. Okay, so we had an announcement from Brazil, and this is the first committee, and they approved the Bitcoin Reserve Bill. So this would allow Brazil to have a Bitcoin strategic reserve. I covered last week that Russia launched and made an announcement that they're going to be doing structured product Bitcoin bonds, and they launched Bitcoin futures on the Moscow Stock Exchange. Those are now live on the Moscow Stock Exchange. And so if you think about BRICS, you've got the Brazil has approved their potential Bitcoin strategic reserves. The R has been utilizing Bitcoin across the BRICS network in order to clear large multinational and geolocation trading as well. The R has now been looking at Bitcoin strategic bonds, which are BIT bonds, which may be a precursor to other countries. And then we look around at the other countries next. So what will I strategy, India, be? C strategy, China. These are two people that have flip-flopped back and forth. But my guess is that China would be the one that would be buying those Bitcoin structured project bonds moving forward. And of course, South Africa, we covered that as well, what's happening there. Meanwhile, during the midst of the war zone, Ukraine drafted a new law that would introduce a digital assets like Bitcoin into a national reserve. Not quite sure how that would work and didn't read the full thing. Normally, strategic reserves come, like some people are using it through confiscation of Bitcoin. That might be the plan. Or there are countries that have resources, but Ukraine is completely vassalized now to BlackRock, which has been funding all of the war as well. And it looks like there is no de-escalation there. So how would it use Bitcoin strategic reserves during a time of coming out of debt? We shall see. It looks more likely to be looking at the BIT bond side as well. Meanwhile, in South Korea, the new president that we talked about last week, Lee, who was a Bitcoin-friendly new president, he's now already introduced legislation this week to allow banks to adopt Bitcoin and crypto. And at the same time, South Korea unveils a plan to allow crypto stablecoins. So it's all about stablecoins, reserves, and obviously they're getting their banks to be able to own Bitcoin as well. The Treasury Secretary, Scott Bessent in US, he came out with some statements around there's been a big push around stablecoins. And he was mentioning what we've been talking about for a long time on BitcoinHardTalk, that stablecoins could essentially back, they could use treasuries to back these stablecoins and allow the US dollar to dominate. And so there are further progressions there. The US Senate, I talked about the GENIUS Act. This is what allows stablecoins to be legalized or progress and have a regulatory environment and the rules around stablecoins after the Circle IPO that launched last week. We had it passed via Congress, has now gone to US Senate, and they voted to advocate for the GENIUS Act and the crypto stablecoin bill, which potentially will go to the next stage on Monday, whatever that may be. Meanwhile, look, we're getting to see loads and loads of stablecoins. That's obviously the strategic focus, especially with what we've been covering on BitcoinHardTalk in the macro sections. And the ability to try and do some creative financial engineering by backing stablecoins, by treasuries, and circumventing monetary policy at the Fed as it's becoming not so effective relative to the current situation of the US government, where people are getting more skeptical about lending to the US government on those 10 to 30 years. There were more auctions for that, so we'll cover more about that in the macro section. But at the same time, as I said, we are swimming with sharks. Remember, Bitcoin proof of work was designed where it doesn't matter who owns it, but you want to own it in self-custody in order to harness the freedom and protect yourself and peacefully boycott the Federal Reserve and the proof of weapons network that funds all this war and violence, death and destruction. Speaking of war, violence, death, and destruction, the banksters from the European side as well. In fact, the $1.5 trillion Deutsche Bank infamously has massive exposure to a short silver trade that we don't know whether that's actually resolves itself. But it announced that it is considering issuing its own stablecoin. So all of these banksters are now looking at issuing their own stablecoin. Now, stablecoin is a version of full reserve banking. Full reserve banking means that it significantly undermines their fractional reserve banking model. It also adds transparency, and it also adds a different layer of knowing what is backing that. So how the banks are going to be managing these two different models, where they want to make sure that you don't take your stable coin out of the bank, which is how stable coins work right now. This really does radically change the financial system, hence why the GENIUS Act and the Fed and various other OCC, currency controllers, are going to want to be involved in these different things. But we got a flurry of announcements around these stablecoins now. For those not familiar, a stablecoin is just simply a way of sending a digital dollar as easy as sending an email, as easy as sending a Bitcoin transaction, where all you need is a wallet address. You can self-custody it, but because it's issued by a centralized issuer, they have to comply with Bank Secrecy Act and AML and KYC laws. So they could, in theory, seize or freeze your wallet or put it on an OFAC list. So it's not like, Bitcoin. However, it is a innocent until proven guilty way of sending a transaction if you can take it outside of the centralized platform. Whereas with a bank, it's a guilty until proven innocent system, where if you're doing a larger transaction, you have to provide everything before the bank allows you to do the transaction. This allows you to send the transaction, and then if they wanted to freeze it or something like that, they'd have to go through a more complex process. So it's a radical change in how things are done, a significant improvement, but it's still not like Bitcoin, which is an actual asset where you can own your own money, spend your own money, and there's a fixed money supply. So it doesn't expand as debt increases in the debt-based Ponzi scheme. But stablecoins are good for spending when you limit your exposure, while Bitcoin is a great technology for saving historically over the long term. Not financial advice, can't promise the future, but I still believe it's the best technology in the world for saving, and it's still the technology that I use as well. That's different from investing. Anyway, so we also had an announcement that Chainlink, which is an alternative type of thing. When you're in the stablecoin world, you can't help but look at what blockchains they are, and then you go further down the risk curve than Bitcoin. Bitcoin is completely different, but when you're building all these stable coins and various other assets, they tend to be done on different chains. Eventually, these things may come to Bitcoin Lightning Network, which is a layer 2 network, and that is starting to get more and more growth and traction. But for now, it's other blockchains that get used, and one of those is Chainlink, which has successfully facilitated Hong Kong and Australia central bank digital currencies. Yuck. So central bank digital currencies are like stable coins, but they're issued by the central bank. So if you can imagine, there is a competition for who is going to benefit from money creation. All fiat currency is created as a debt. If you do it within a bank creates a digital currency, which is a bank deposit every time they issue a loan. So if you take out a mortgage, they write that into existence. They create it out of thin air. It appears as a digital deposit in your bank account. You can then buy a house with that, and they get interest on that for as long as you got the mortgage. And that was new money created. It's like their digital currency within the bank's ecosystem. It comes with interest, which is why it's a debt-based Ponzi scheme, because all currency is created as debt, all fiat currency, and therefore, where is the money to pay the interest? We have to roll over the debt, which is why consumers, businesses, governments, central banks have this debt-based Ponzi scheme, particularly with the US dollar that sits out of the global network of currencies that are kind of like nodes on top of that. But anyway, between Hong Kong and Australia, there was a central bank digital currency exchange that is being launched using Chainlink to create these interoperabilities. And it's a pilot that was done with Visa, Legacy Transactions, Fidelity, Legacy Asset Manager, and China AMC as well. So the big players are starting to innovate around this. And remember, we're going to be moving to a world of central bank digital currencies or stable coins, which is why your job is to build as much Bitcoin as possible and only use those for your spending money, because they can take away a lot of your freedom as they become programmable. So it's a race right now to earn as much fiat currency as you can, save it in Bitcoin, own more Bitcoin this month than the previous month, and before we transition. It looks like America is going full blown into a technocracy. I'll cover more of that in the macro section and how it relates to the American civil unrest campaigns that we're experiencing right now. And within Europe, later this year, by October, they're meant to be beta testing China, Australia, more and more central bank digital currencies to be beta tested. Keep an eye on these things. They are coming, and your job is to get as much fiat currency while you can before this starts integrating with artificial intelligence and we end up in this deep surveillance. You have to build your economic power by beating the system, boycotting the system by saving in Bitcoin, boycotting BlackRock and other asset managers that want to own your Bitcoin so that they can use it with other banks that want to leverage it by not borrowing from them, holding it in self-custody and spending local. And this is how we're going to be able to make sure that you exit the system, and we need as many people to be able to do that. We also had Peter Thiel. Peter Thiel, we'll cover more in the macro section. Deep state actor for the military-industrial complex, ushering in genocide as a service, occupation as a service, beta tested in the Middle East, being involved in the technology, drones that are beta tested in Ukraine right now, and just ushering in all sorts of crazy surveillance tech. He backed an ED, basically he backed a crypto firm that is going to be filing for basically a US IPO in order to go public. And what are they doing, all these companies? They're just going public to buy Bitcoin. It's the latest frenzy. We're seeing it all over the place. Rather than you owning your own Bitcoin, rather than a company going bust, as we transition to this world of artificial intelligence where business models are being disrupted, rather than taking these public companies, they are being reversed into Bitcoin treasury companies. And we have had the next wave of pumps and crazy valuations with these different types of companies. And I've covered this in previous episodes, more and more companies getting into this. I don't recommend being involved in any of these things. You've got the most beautiful asset, Bitcoin, and these public companies want to introduce counterparty risk into the middle, complications in the middle, with the desire that they want to be able to drive you higher returns than owning Bitcoin. But that trade hardly ever works out well. Sometimes it does, sometimes it doesn't. And an example of that is GameStop. So GameStop announced this week that it's going to is launching a convertible note offering of $1.75 billion. And with that $1.75 billion, they're going to be buying Bitcoin. And they also had in their business plan that they're going to be getting into automated trading cards. Now, GameStop is like a meme coin. It's now a Bitcoin treasury company. It's got this legacy business. It's got $5 billion of cash reserves. It's got a Bitcoin treasury, now automated, trading cards. Who knows what this thing is going to be? But the interesting thing is this time it didn't quite work the same as everything else. As soon as it was announced that it's going to be doing this $1.75 billion, when it's already got $5 billion, for some reason, GameStop corrected 25% after the announcement. So we're already starting to see some of the weird cracks in this model of turning these companies into Bitcoin. Now, what's interesting, though, is that if you build enough Bitcoin strategic reserves or treasuries within these corporations, again, I'm not saying whether you should be doing that, whether you should be investing in those things, stick to Bitcoin, you'll be fine. Add all these layers of complexity, things can only go wrong. But the fact of the matter is that it is saving many of these zombie companies. In theory, it shouldn't trade at a discount, and if it does, you can imagine some of the predatory private equity houses just accumulating these companies, in order to take out the Bitcoin. So it adds somewhat of a price floor if it ever trades at a discount to that. But as I've always said in previous episodes, this is building up a systemic risk event that eventually could lead to cascading liquidations. And we've seen this time and time again within Bitcoin. And I just want to make sure you're not on the wrong side of that trade. If you hadn't watched, what we do each week is I break these videos up into three. If you head over to my YouTube channel, Simon Dixon, there's two sections: the live, which is where all of these episodes are, and another section is the videos. You can get just the relevant section, and we title, and you can go a little bit deeper around making sure that you don't get caught on the wrong side of these things as well. There was also basically a company, I think it's called Chamonix Trading Holding or something like that decided to do this with Ethereum. And they announced that they're going to be doing Ethereum strategic reserves, and they've accumulated some Ethereum rather. And this went down 75% after the announcement of a private placement in order to buy Ethereum. So strange behaviors happening. Other ones, they went up like 15x, 25x again. Stay away from the gambling. Bitcoin is a beautiful asset where it can allow you to avoid all of that gambling, own more Bitcoin this month than the previous month. And everybody that has done that over a continual period of 4 years has beaten every single fund manager, hedge fund manager. You get to beat Wall Street. You get to beat all these people that want to come between you and your money. And very few people outperform it. In fact, it's incredibly rare as well. But the idea behind this is the banksters, investment banksters. I used to work in investment banking, whether it be on the market making side or the corporate finance side. I know how these people think. They are cashing in on all of these Bitcoin treasury companies and reforming these zombie companies and doing SPACs, reverse mergers, consolidations, all sorts of fee earning activities. Then they'll be doing leverage buyouts, Bitcoin backed lending. All of the TradFi sharks are getting in. And it doesn't matter if you stay outside that system, you can allow them to carry on because Bitcoin was built as proof of work, where you get to own your own money, spend your own money, and the monetary policy of Bitcoin layer one ain't going to change, despite what these crazy derivatives traders, banksters, and traders that will be manipulating the short-term price as well. One interesting one as well, for those of you that are old school, that know I've been doing this channel since about 2009 when Bitcoin first launched. And during the ICO phase, which was approximately I'm showing my age now, 8 years ago, the 2017 ICO phase, one of the real controversial ICOs is an initial coin offering where you launch a coin, you sell it to people that want to purchase that coin using Bitcoin or another type of token. This was all the rage in 2017. It was kind of like the Bitcoin treasury companies where everyone was launching a token. You couldn't get away with it. You couldn't get away from it. One of the 1 year ICOs, they did this whole ICO that was raising for a whole year based upon an algorithmic way of calculating the price you get.
Apologies, everyone. We seem to have lost Simon. He should be back soon.
So I was talking about the 2017 EOS ICO, which was one of them. It raised about $4 billion or something. Don't quote me on all these numbers. Settled with the SEC for maybe about 27 million or something that is insignificant relative to what they actually raised. And they ended up with hundreds and thousands of Bitcoin. And then they launched the EOS network, but virtually no one used it. Interestingly, they ended up like trying to create this decentralized social media platform. I think the website was called like Voice or something. And Michael Saylor ended up trying to acquire that domain. And that's how he first heard about crypto before he got into Bitcoin as well. Well, anyway, these people that raised all this money, they didn't deliver upon their promise. Some would call them scammers, but they ended up with all of this Bitcoin within this company called Block One. And now essentially it looks like they're going to make that company Block One public as a Bitcoin treasury company. Now, what is interesting is they raised so much Bitcoin that they didn't end up doing anything with. They had this zombie company where they just didn't need to do anything but hold the Bitcoin. And that's the interesting trend that we're starting to see as well. So it looks like we've gone full circle where the company that kind of was very scammy to raise through this ICO that had to settle with the SEC that didn't do much, put it in the company, and now the company's going public, and now they're going to create a public Bitcoin treasury company on all the Bitcoin that they accumulated from everybody. So it looks like they will IPO, if memory serves me right, last time we did the research, and you can look at the wallet addresses, with about 164,000 Bitcoin that they ended up raising through this token sale, which would essentially make them the second largest public Bitcoin treasury company behind Strategy, which is headed towards 600,000 Bitcoin. And so, you know, the irony of this whole thing is that you make a load of money out of Bitcoin by selling a token, you put it in a company, and now you're going to go public. And just by keeping that Bitcoin rather than doing anything, you know, we're getting these very, very strange scenarios where maybe we're going to see more of that. But the latest trend is all of these companies going, going public anyway. What else did we see? We had a report came out by Coinbase that they said 60% of the Fortune 500 companies are now working on a crypto project as well. With that in mind, we started to get to the next phase of what I covered earlier, the Stablecoin Act, the GENIUS Act. We've now got the amended version. It exceeded 60 votes in the US Senate. And so apparently that means that it's going to be able to go through maybe next week. And that was, you know, ahead of the Circle IPO, but we're obviously getting a little bit of a correction in the market due to the geopolitical section as well. Who else is getting involved and jumping on the bandwagon? Bank of America. Yes, the same Bank of America that used Palantir, Peter Thiel's surveillance technology, in order to launch a campaign to take down Julian Assange because he created WikiLeaks, and WikiLeaks ended up being saved by accepting Bitcoin payments, which allowed for this freedom of speech technology that was trying to be taken down by surveillance technology that was saved by freedom of speech money. And the deep state came after him, tried to put him down in prison for all sorts of things, including with the leader of UK right now, Keir Starmer. Now we've got Bank of America, who's coming full circle, and they're looking to launch they're developing their own crypto stablecoin. We also had announcements from Walmart. We also had announcements from Amazon that both of those are exploring issuing their own stablecoin. Also, Shopify. Shopify wants to partner with Coinbase and Stripe in order to issue a stablecoin. Now, what becomes interesting about this is that Stripe is a card payment merchant processor with APIs, which allows you to plug it into your technology. As we move to a world of AI agents are going to be able to program such applications, you can have it where they can accept card payments via an API via Stripe, and that can then be withdrawn as a stable coin and exist in the digital era, while you're having these different agents and AI agents trade with each other. But then you can go from stablecoin to Bitcoin, and you can put it onto a Bitcoin or stablecoin debit card, and you can completely bypass the bank altogether and live in a world without banks. Now, when the companies like Jack Dorsey's, I think his Strive, was it Strike? I'm getting confused there. Strive. So Vigit Ramesh. Yeah, anyway, getting confused with all the different ones. He was putting all of these different terminals where shopkeepers are able to accept payments. They'll be able to accept them on stable coins. That can be done on Bitcoin Lightning, various other things. And now we're entering into this bankless world as this progresses. Now, what happens when you can receive yield on that stable coin backed by treasuries issued by these technology companies? That's going to be the gateway drug into the system that they want to put you into. And this is progressing at a rapid pace as well. And there was one final announcement this week in Bitcoin, which actually is another leapfrog moment. If you are a geek like me, or you're ever involved, I used to have a US securities broker. We sold it to Coinbase. But if you're involved in US securities transactions, you'll know that most of the shares that you think you own, you don't own. You own them through your brokerage, whether it be E-Trade, Fidelity, whoever it is that you own it through, Interactive Brokers. And that broker is the register of those shares, and they maintain a database of who they owe those shares to when you log into your trading account. But the DTCC is the register of all of these shares, and it's mainly brokers that have access. So you add layers and layers of middle people between you and your shares. But now DTCC is considering issuing their own stablecoin as well. So when you have the share clearinghouse and register that is then getting into stablecoins, that is then getting into tokenizing these shares to integrate with these stablecoins, you can imagine all the disintermediation that's happening, taking out all of these middle people, and it's getting closer and closer to this chain, which is why they want to get these stablecoins out. And that coincides with some of the things that we're going to be covering in the macro section. So that is everything that I think you need to know about that happened this week in Bitcoin, that lays the foundation for what we're going to cover in part 2 and part 3. In part 2, we're going to do this week in macro. So if you enjoyed that, just before we move to part 2, in macro, we're going to be covering what the real story is, how the macro issues tie into many of the things that we're seeing in LA, the looting, the riots, the peaceful protesting, the destabilization campaign, the technology, how that relates to the big beautiful bill, what we're seeing in the trade wars, the latest in the trade wars, and the decreasing value of the dollar, and how that's all related to oil, gold, and how it all fits together. We're going to be covering all of that. What I would love for you to do is do me a quick favor. We are very close to 100,000 subscribers on YouTube right now. If you are not a subscriber, if you are watching this and you haven't subscribed, head over to YouTube. If you're not watching it on YouTube already, hit the bell symbol, hit all on the subscribe button, and YouTube will notify you each week. Even if you were subscribed before, please go through that process again, because I believe we're going to be unshadow banned, and we have started to see the unshadow banning process. And once we hit 100K, we'll be able to get a review. Now, if during that review, it turns out that YouTube does something funky, I've had this channel, since right before Bitcoin launched, and documented the whole journey from the very beginning, including the first Bitcoin conference. If it turns out that they're going to do something funky, make sure you follow me on Rumble. We will move over there. So have that as a backup. And in case that goes wrong, we'll also stream on X. So follow me over there, where I give real-time updates. And the backup of the backup of the backup is we've got our own environment on simondixon.com. If you join for a free membership at simondixon.com, you get my newsletter completely free, and I'll email you every week to make sure whatever happens, you get this information. plus digital copies of my free book, The Great Depression of the 2020 video series, various other goodies in order to help you transition to this world of Bitcoin, AI, and CBDCs. So do me a favor, help the algorithm, help me get to 100K. We're very, very close. Subscribe. And if not, if you're already subscribed, share, repost, hit the like button, put a comment below. It will help the algorithm and it will help us get to that review that we've been trying to get to. I'm going to take a little bit of a sip of water while you do that, and then we're going to jump into part 2, This Week in Macro.